Hello everybody, how are you doing? My name is Theodore Arakelian and I'm a real estate agent, and I'm here with my good friend Anna from Arakelian Loans, and today we're going to debunk 5 myths in the lending industry, and Anna will help out with all of this. How are you doing, Anna? Thank you for coming on.
Very well, thank you. Thank you for having me.
Of course.
Very excited about this whole show and to give our clients and potential clients and some ease of mind.
Yeah. So everybody knows that the lending process is not something that's so easy. It's difficult. When you think about it, you get nervous. Sometimes they're like, I don't know if this home is going to work out. If it's not, a lot of the times my clients, that's their main issue. It's not about finding the right home. It's whether or not they will be approved for that home or not. So when they fall in love with the property, they kind of hold themselves back because they're not sure if it will be approved for the loan or if they won't. One of the main issues that I always have with my clients coming in, they say that, hey, I was pre-qualified for the loan, but my loan it didn't get approved. So what are the reasons for that, and why are clients nonstop coming in day in and day out saying that same thing over and over again?
Well, Ted, I'm glad that you brought that up because there's a big difference between pre-qualified and pre-approved. Pre-qualification is just basically the loan officer going over whatever information the borrower provides, such as income, such as credit score, whatever the borrower gives them as far as verbally. And they go off of that and they just say, yes, you're pre-qualified based on the information you provided. But it doesn't mean that they're actually pre-approved. Pre-approval means that the loan officer actually reviewed their tax returns, run their credit, they know their credit score, they know their credit history. They might have lates on their credits that even the borrower is not aware of, which we get a lot of times that happens. So that's why I personally, at Arakelian Loans, we thrive in to make sure that the borrower fully is qualified, pre-approved, before they go out and purchase a property or look for a property, because that way we're saving your time as a realtor and also borrower's time and also our time, of course. But by not just having a transaction that might go through and might not go through.
So when you say the buyers are pre-approved, that means that if this buyer is pre-approved by you, that means that their loan will be approved and the home, if all goes well, is theirs. Correct.
99% of the time, yes.
And
there are some exceptions to the rule. Like a borrower going and spending checking their credit cards. Next thing you know, their credit score from 720 goes down to 640, and they have all this debt. If the borrower follows the steps and the instructions that we gave them, and it doesn't, nothing major changes on their credit, or if they don't lose their job or any of that stuff, if we pre-approve them, that know for a fact that the transaction will be closed.
And I noticed you just launched your new app where I used it myself when you sent it to me, and I was able to track my clients, every step of the way. So I didn't even have to bother by calling you, and I was able to go to your app and just go to my client's name, and through that I was able to know what step we're at, why is it taking so long. Because at the end of the day, once the deal closes is also when we all get paid. So everyone wants to have that sort of transparency that that your app now gives. Why did you decide that was necessary to make an app?
Well, let me back up a little. I've been in the industry altogether over 14 years at this point, and I've had my own company. I work for different companies and so on, and there's always a question that rose, an issue that rose that, borrower calls, realtor calls, what's going on, and then we as the loan officer go to processor, say what's going on, processor doesn't respond on time, And, you send them something, it takes them 3 days, 4 days, 5 days to work on them.
Yeah.
You get frustrated, you know what I mean? It's just a whole chaos that comes along with it. And nonstop phone calls until 10, 11 o'clock at night, contingency removals, issues, this, that. I'm pretty sure a lot of loan officers realtors can relate to that.
Yeah.
And then, of course, you have the borrower, especially first-time buyers. They have no idea what's going on. It's absolutely terrifying for them.
Yeah.
So with that said, my husband and I, Patrick, we decided, you know what, there has to be, I knew there's a better way to do things, and he joined his forces with me, and we said, we need to figure this out. We need to get this thing. We've been working on it for about 2 years at this point. And as I went, again, on my own company, we launched it. We're still working on it, still work in progress. Of course, we take suggestions from loan officers, also realtors and borrowers to make little tweaks here and there. But it's extremely simple. It updates immediately. It's a live update. As soon as we change something in the file, automatically the borrower receives the same email or the push notification on their phone. The realtor receives it as well, and the processor, whoever the LO is on the file as well. Everybody gets it immediately. Any changes that is done to the transaction. And again, it eliminates the phone calls. There's no need for you to call me, 5 times a day to get a status update. You go in there, you check. Of course, we're always running into issues with it's new. It's people are not used to it. Because our whole real estate and the mortgage industry has been stuck for 30 years through the same exact process, same exact way. So we do run into challenges as far as people starting to use it. But the minute they use it, they're like, oh my God, this is amazing. I had one realtor told me this morning that she forwards my emails, that automatic emails that they receive with milestones and everything else, to the listing agent. So the listing agent is fully aware with what's going on as well.
Yeah.
And maybe something, in the future we could add that in there as well, just for the listing agent milestones for them.
So if you guys don't know, Anna used to work with a ton of other mortgage companies, and what she did was she got what's working and what's not working. And then after all that, came and created Anna Care Loans, and is now doing everything that was working and adding to it, which is now adding the app where is just perfect for buyers, for agents, for listing, for
transparency.
It's transparency completely towards all parties, and that I think has helped so much with the entire process. But moving on, I know another major myth that a lot of I'm a USC grad, and a lot of people, USC alumni that I've graduated with, got a job. They got corporate jobs. For example, I was just recently telling you of a recent classmate I had that just got a job at Deloitte, and she's now looking into renting a home, but also wants to purchase, but she's afraid that she doesn't have that 20% down to put. And obviously getting that job, the student loans, and trying to save up in all that meantime, and then to get a property, that 20% down is always this kind of thing that's been instilled in all of these buyers, that you need to have 20% down to purchase a property. Is that true?
It is absolutely not true, especially for, recent graduates. They think they need 2-year history in order for them to qualify as well.
Yeah.
They think they just started making the money, they're not going to be able to qualify. That is absolutely not the case, because your job is used as your school is used as your history. Because you graduated, and based on the, whatever your major is, you have a job now. So they take your current income and they use your school years as a history for employment. So
in her case, she was an accounting major, and I think in accounting you stay an extra year specializing in accounting. So that 1 year was counted as work experience in that case.
She doesn't really need to stay as for 1 year to just for accounting. You don't have to do that. If you graduate, if it's 4-year term, you graduate on your 4 years. And you found a job, you got hired by a company, and they told you this is going to be your pay. You got your first paycheck. It shows your pay on it. They do verification on it. You're fine.
Wow.
They use your year-to-date income. Your school history is your employment history, because you work towards it, so to speak. They look at it as work.
So if not 20% down, would it be a lower percentage or zero? I mean, how would that?
There are loans that you could get with 1% down. You could get with 3.5% down.
Wow.
You could get with 3% down. There are all these different options, and there's also this. I don't want to call it a myth, but this horrifying thing that everybody talks about, like PMI, mortgage insurance. Everybody thinks it's the devil. You know what I mean? It's going to come and hunt them down.
For those that don't know, what is PMI?
It's if you put anything less than 20% down, you're going to have a mortgage insurance. It's like a protection for the mortgage. It's like a car insurance type of thing, but it's protecting your mortgage. It was put there after the crash happened, just to protect the investor, whoever's investing into covering the difference of the 80% loan to value. So with that said, for borrowers such as her, she could easily purchase it with 1% down, with 3%, with 3.5%. Yes, she will have the mortgage insurance, but there are different types of mortgage insurances out there. It's not just one kind. There's borrower-paid mortgage insurance. There's lender-paid mortgage insurance. There's also mortgage insurances where you could pay half of it and add back the other. I mean, I don't want to get into too much details on it.
Basically, there is a way to get a property without putting 20%
And one
down.
thing I want to add in there that we do have access to the nation's lowest mortgage insurance rates. I recently have one transaction that her mortgage insurance, she's a recent graduate as well actually, her mortgage insurance is $62.79 a month.
Wow.
So paying that for 2 years until you reach, or 2-3 years, it's not really a big deal versus putting 20%.
That's a no-brainer, yeah. Wow.
So their options are always there, and I always say there's no such a thing as not being able to get a loan. It's just a matter of the loan officer actually knowing how to structure it and knowing the products that are available for the borrowers.
And they always say it's always better to own a home rather than to rent, because once you do the calculations, your mortgage comes out to even less than what you are renting the place. So sometimes that is an option. If you are in the market to rent a home, it might be better that you own a home if that option is available.
You should always exercise that option as well.
Yeah.
Because it might, at the end, it might make more sense for you to purchase than
Exactly.
for you to rent. Just to bring you guys a quick example in regards to that. I have clients, two brothers, recent graduates about a year ago, and so on. One of them just recently graduated. And they literally purchased the property as an investment just for them to be able to have a tax write-off for the interest. Because they're single, they make over $60,000 a year, and W-2 income $60,000 single, that's a lot of taxes.
Yeah, wow.
So they just bought that for specifically, and they said we don't need it right now as far as for us to live in there, so we could rent it out, benefit from the mortgage interest that we're paying, and then later on in the future, whatever happens.
Wow. Another major myth that I wanted to debunk is me as a self-employed realtor. And I'm sure it's not just me who is self-employed. There's a ton of, I want to say 80% of my clients are self-employed. They're always fearful that they're not going to get approved because they're self-employed, because it's stated income, because they banks don't like that, they won't approve them. Is it possible for someone who's self-employed to have the same process as everyone else who is working for a big corporation?
Yes, it is. That's a very big myth, because I do personally specialize in self-employed borrowers, and I have a lot of investors that I work with, for years, and we structure their process is a little different than a straight W-2 borrower, because every year we structure their taxes. We make sure that it's filed in the right way, proper way, the way it's supposed to be, in order to benefit them, in order for them to actually show the actual income, and also at the end for them to be able to utilize the actual income that they receive, which is very important, because they just write off everything as expenses, and then they're like, oh, okay, what do I do now?
What am I left with?
Exactly. So there are programs available without any questions, and I work very closely with all my self-employed borrowers to structure them in a proper way to make sure that they qualified. There are stated program options without any questions. I personally, that's my last resort to go to if they don't qualify, because it's a short-term solution to something. Yeah. But in the long term, it's not beneficial for them because you end up with a higher interest rate, with the maybe 5-year ARM and so on, and it just becomes a whole tricky, and the costs are much higher for a stated program than for a regular conventional loan. So, but there are options definitely.
Well, I mean, you guys heard it here. That's just only 3 of so many myths. I mean, you get probably questions every day about these, like, hey, I don't have 20%, can I get approved? Or hey, I have stated income, can I get approved? Or and there's so many myths to be debunked, but here was just a quick kind of like 3 of them. I've been working with Anna for so long now and I know that she can get it done, and I'm just so thankful to have her on here to share all of that, because I know what she does and how she does it, all her transparency to her lenders, I mean, to her clients, and to us, I mean, as realtors. So I want to go more in depth of these myths. So, for example, different examples, different, because every client that comes in it's a different story, it's a different example. Maybe we can go more in depth in the future per client, I guess. And if you guys want to see more of that, we'll have all of those links in the bottom, in the description, wherever it may be. If you guys want to check out Anna, we'll have all of her contact information, her Instagram. You're very active on your Instagram. She'll respond to DMs. She always posts stories about the rates that are always updating. And if you guys, I mean, I use Anna. It's always a benefit to call and see what options you have available, because trust me, there is always a way.
100% with you on that. There's always a way. Thank you, Ted. I absolutely, love what we started doing here, and I want us to be able to educate people out there, because these myths are always lingering around. And as you know, you always have that neighbor, you always have that cousin, you always have that friend that knows more than the loan officer or the realtor, and they're always there to give you all the suggestions and information. And it's always good to just give us a call. We'll just simply answer it and explain the process to you, and we'll just take it from there.
Definitely, yeah. Our goal here is to make this as easy as possible as we can for everyone. And again, thank you so much for answering some of these myths that I myself get a ton of times. I can't even imagine how many times you get those questions. And we'll definitely do this again, more in depth, we'll see what more people want. I mean, and hopefully this can be a weekly thing where we can debunk more myths. And thank you guys for tuning in. And from Anna from Anna Care Loans, and from Ted from TedSoul.com, we'll see you guys next time. Thank you. Thank you.